In this video, I'm going to give you 7 steps so that you can learn the most about a company with the least amount of effort expended and the least amount of time. We're all busy in today's day and age. Maybe you only have $500 to invest. Is it worth it for you to spend 6 hours doing due diligence on a company? Probably not. Due diligence is a bottomless thing, and everybody always tells you to do it. I even tell you to do it. But if you want to do it right, it's going to be a massive process. But what about if you just want to take a look at a company that you own right now, or get an idea about where a company is going to go next, a company that you want to buy? This is the most you can learn about a company in the least amount of time if you want to just quickly go through and see where this stock is headed. For many of you, this is your first time here. My name is Peter Leeds. I'm the small stock specialist. And you might ask yourself, why you focus on small stocks in the Peter Leeds newsletter? Because they produce the biggest gains. And understand that nothing we say anywhere, especially in this video, is intended as personalized trading advice for you. Quick diligence is going to help you know where a company is in their life cycle. It's going to save you a ton of time. You're going to lose less money when you make a mistake. You're going to make more money when you make the right call. And before we get into the 7 steps here, just remember, proper due diligence, and even this rapid diligence, this quick diligence, is more about you than the stock you're investing in. It's about you understanding what a company is, where it's going, and why it's going to get there, and by when. All of that will become a lot more clear as we walk forward through the fog. What I'm going to do is I'm going to tell you the 7 steps really quickly, bang, 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 and then we're going to do it again, and I'm going to show you on screen as I actually do it for an actual real company. You can see what to click, where to go, all of the stuff to do, proper, quick, rapid due diligence. Number 1, you go to the most recent quarterly balance sheet. You see what the company owes versus what it owns. And I should jump in here really quickly before I forget. Understand that proper due diligence is a massive undertaking, and you're looking into every aspect of the company, kind of like what we do in the 29-point leads analysis process, which I built and created for stocks $5 and under. But it applies, and I think you should do this for any small stock or any large stock. It applies even for the blue chip companies. If you want to see all the 29 points of our leads analysis, go to peterleads.com. But in the meantime, step number 2. Now you're looking at the income statement. You're seeing how much money they're bringing in and what does it cost them to make that money. Then you can quickly identify the competition and then look into them and see if they're progressing or accelerating more than the company you're interested in. If the company you like is the slowest grower out of 7 in the industry, that's not a good investment possibly. Next, you do a data absorption phase where you're going to read the management discussion and analysis, maybe a couple of press releases, take a look around the website. And since we're talking about quick diligence here, I'm not going to tell you to call the investor relations contact at the company. You're going to learn what you can in the least amount of time. That's what we're doing here. Only then do you get to the trading chart. And you're going to look at things like the trading volume. You're looking for simple technical analysis setups like resistance levels, support levels, momentum indicators. When you get to the chart phase, it's really simple to look at, quick and easy, and you get an idea about how a stock is doing health-wise just by looking at the trading activity over the last year or so. And you can take a quick look at the analyst ratings. I'll show you how to do that. But I would warn you about reading too much into these. A lot of times these donkeys have different motivations than they pretend to have. And the bonus point, number 7 here, is actually kind of fun. You're going to be a digital private investigator. You can look into who's running the ship and what they've done before. Boom, that's it. 7 steps, and you'll be able to have a really good idea about any individual company, especially even compared to their competitors, and seeing how they're progressing and growing and accelerating or not. Then you'll know better whether or not you want to be invested in that particular stock, and also where you think they're going to go and by when. This is the most you can learn about a company in the least amount of time. Now, I'm going to record my screen and I'm going to show you, we'll go through an actual stock and I'll show you exactly doing the 7-step rapid diligence process. And we'll see if you guys like it. I always like to use free and simple tools that are available online so that we're all looking at the same stuff. There's a lot of more advanced trading chart programs and more advanced sites that I'm going to show you. This is supposed to be easy, simple, and quick, especially if you're just getting started or if you don't have a ton of money to invest. You don't want to waste $150 a month on some kind of advanced 3rd level quotes or anything like that. I'm just going to show you what you can see for free online as long as you have internet access. So I always like to go to a nice simple charting website. This is Big Charts, bigcharts.com. And we'll take a look at GameStop in this scenario. So you put in the ticker symbol, just get a basic chart, but I'll tell you what, my chart will look a bit different than yours because I went to advanced charting and I set up some of the settings. But I'll zoom in here to a 2-month chart so we can see it a little bit better. And by disclosure, I did own GameStop shares and I did sell GameStop shares. But I'll tell you a couple things here. You see when the trading volume really increased and the price of the stock increased at the same time, that's accumulation volume. If you see a huge volume increase and the stock is falling, that's people getting out of the shares. They're liquidating their positions. So anyways, the 7 steps. Number 1, you see here it says profile, and you can get all of this information. It's publicly accessible and available through Market Watch, Google Finance, Yahoo Finance, through Big Charts, through any online stock trading service. It's going to have this information available for free. So you choose what you like best or what's the best one for you. But you go down here once you hit profile on the company and you're going to see financials right here. You know, and every website's different. So if you're on a different website, there will be different places to get access to this information, but it's all the same. It just looks different. So you're here on the income statement. Here's what we're going to do. Balance sheet, quarterly. I always tell you, a balance sheet is a snapshot of the financial position of the company at that point in time. If you do quarterly, you'll get the most recent information. When you scroll down here, what are we looking at? We're looking for assets versus liabilities, how much they own versus how much they owe. So they've got $2.6 billion in total current assets and $3.68 billion in total assets. Current assets means that they're accessible or they're likely to be used within the next 12 months. A thing like a factory is an asset. It might be worth billions of dollars, but you're not going to trade in and out of it or take money out of it on a short-term basis. That's something you invest in and you hold it for many, many years. So it's a long-term asset. So remember those numbers, and then you go down here to total current liabilities, $1.35 billion. Since that compares to $2.6 billion, their total current assets are a lot higher than their total current liabilities. So they have enough money in the short term. Same thing with the long-term assets versus the long-term liabilities. Now we go to step number 2. Just go up here to the income statement. And you keep it annual at first, because then you can see year by year how much money are they making. And what you're looking for here is to see if their sales are increasing over time on a year-to-year basis. And you can see that they were doing a lot better in 2018 than they're doing in 2022. So that's a negative trend. You can see here, this is what this is showing you. It's high, high, lower, even lower, a little bit better. And what this does, it shows you out of that money, here's all the costs to generate that money and to fulfill the sales of whatever they're selling. And then you go to the net income. So 5 years ago, they made $230 million in the year. That's going to be earnings. And the year after that, they lost almost $1 billion. Then they lost $500 million. Then they lost $214 million. Then they lost almost $400 million. And this is the stock that everybody's buying. It's all over the news. So it's a good one for example. But you can see people don't realize how much money they're just bleeding. They're just bleeding cash. And it goes down here to earnings. And you can see that they lost $5 a share last year. What we're going to do though is even zoom in a little bit closer. So you go quarterly and you'll see, are they still losing money? On a quarter by quarter basis, the last 3-month period, they lost $147 million. The 3 months before that, they lost $105 million. Tell me something, if you were able to blow through that much money, you'd have a pretty big company too. You'd have a lot going on, but it's not like they're profitable, not even close, quite the opposite. This is a matter of time until this company has to restructure, in my opinion. Now we're going to go on to step 3, identify the competition. Get a look at that and see what we're dealing with. So you go up here to overview and then scroll down on the left side, and I'll tell you again that there's other websites that'll be different, but in this one, this is how you find the competitors right here. You can see who they're competing against. You can even look at these companies a little bit more deeply to get an idea how they're doing in comparison to the company you like, and even put them on the chart and see which one's been performing better. For example, swing back to big charts, go to advanced chart, and we're going to do a comparison chart here. Put in the ticker symbol, GameStop, advanced chart. And over here on the left side, compare to. Let's compare it to one of their competitors, Apple. And you can see this is Apple's share price activity and performance. And GameStop, they both start on this chart at the exact same point, and then you can compare. GameStop did well, did worse, did okay, came down a lot. But meanwhile, Apple has been performing better over the year, up 40%. GameStop is down 15%. But anyways, let's go back to the basic chart on GameStop, back to the profile here. And we're going to go on to step 4, data absorption. Underneath the chart, you can see up here are news items that may be relevant, and below are news items which were released by the company themselves or someone with a hidden motivation. So here's, for example, GameStop investment analysis. And if you care about all this stuff, there's more to learn, but I don't bother with this actually. GameStop website. Any stock which is publicly traded is going to have free access on their website to all the information you need as an investor. So you go down here to investors. And you can get the quarterly results, you can get the annual results, and dig around a little bit in here until you get an idea about what the company is doing. You read this stuff and you get an idea what they think is going to be happening in the future. Tells you how they've done, and then they talk later about what they expect to do. Skip all this stuff if you want to, and you get an idea again of their financials. You can see last year they lost $5.25 per share. Anything you need to know by just looking through this stuff. If you don't understand something, it can be okay to gloss over it a bit, especially if you're just trying to do a really quick look. I personally look at thousands and thousands of stocks. Stephanie does a ton of it too. She does the heavy lifting. So it's very important that you're able to go through these quickly. If you take too much time on any one stock, it's just holding you up to go to all the other hundreds and thousands of stocks that you've got to look at. So you need to learn to be quick with this stuff. If you want to go through a lot of options, or if you don't have a lot of money to invest, so it's not worth it to spend so much time doing it, this is one of the ways you can do it. So read any of the press releases that catch your eye and go through the website. Usually you'll be able to find a management discussion analysis, MD&A. That's a great thing to read if you only have limited time, because it'll give you their full perspective of where they are at, where they think they're going, and why. But always consider the source of any information you're looking at and the intentions of the person who gave you that information. It's not always what you think it is. But now we get to go to the trading chart. So I always go back to big charts. I lost my chart, so we're going to go GameStop, GME is their ticker symbol. Give me a nice 1 month chart. You can see this is a very negative pattern. But you're looking at the trend. Short-term trend here was definitely higher. Then this is called a spinning top. And if you guys take my candlestick trading chart course, you'll get to see all stuff like this, and I'll tell you something. This is an indicator that it's a change in the trend, indecision among investors. But actually, we're going to back out a bit of the 6 month chart. And what you're going to look at, just at a glimpse, you look for things like simple technical analysis setups, like resistance levels, support levels, the current trend, any trend reversal indicators. It's all really simple stuff just by glancing at the chart. But always pay extra special attention to trading volume. This is a company that you already know now is losing hundreds of millions of dollars every 3 months. And you can see the trading volume was really low, and all of a sudden it picked up huge time and the stock price went up. This is an artificial situation that's setting up here. A lot of people are buying into the stock right now, but they don't have any idea how badly this company is being run. But you do, because you took less than 4 minutes just to quickly look into it. And the more you do this, the more quick it'll go for you. You'll learn what to click, where to go, what to look at, what it means really quickly as you become more practiced in it. But here's something else I'm going to show you now for step number 6 out of 7. So yeah, we're almost done. That's pretty quick, yeah? Analyst Estimates. Boom, right there. You click it. And I again will warn you, analysts are not as good as they should be. I'll say it that way. They're wrong plenty of times. A lot of the time they're telling you something because they have a different motivation for it. Sometimes they're honest and they're just bad at it. Other times they're really straightforward and they're really good at it. But you got to figure out which analyst you're going to believe. I don't trust any of them. But you've got all sorts of things such as price targets. For example, right now, there's one analyst saying hold, 2 analysts saying sell. I would suggest that this analyst saying hold doesn't know what he's doing. But you can look at 3 months ago, you can just tool around here and get to know what analysts are thinking. Typically, generally, you're supposed to think that an analyst will have a better view of it. It's not just some retail investor. So yeah, they should be a little bit better. But I'll let you guys decide on your own. It's just going to give you a better idea about what other people are thinking about this exact stock. View all upgrades and downgrades. You can see by date which company maintains their rating, downgrades, upgrades, downgrades. And now here's the final step, step number 7. I'll call it a bonus step. This is where you're going to be more like an online digital private investigator. You're going to go to LinkedIn. You're going to search. You find the chief executive officer of the company and you put them in the search field. Who is the GameStop CEO?
The CEO of GameStop is Matt Furlong.
All right. So Matt Furlong. Matt Furlong. So you go to Matt Furlong, scroll down, and you're going to see who he worked for before, who he worked with before. He's an associate director for Procter & Gamble. Since they're such a big company, it won't really help you. Ideally, you find a company that they ran that was a smaller company. You can see if it did well or not. If it did well, then you know that people typically do what they always tended to do. So if they make one company increase in price a lot, they're likely to do that again with the next company. But since he worked for Procter & Gamble and Amazon, and now GameStop, you won't be able to tell if his involvement influenced the stock very much at all. The bigger something is, the more energy it takes to move it. But that's just some of the things you can do. Those are the 7 steps. Of course, you can do as much as you want. It's a bottomless thing. But you have to gauge how much time and effort you're going to put into it and how much you're going to get out of it. This is, in my opinion, 7 steps that'll be the most result of understanding the company with the least amount of time. You could obviously do more, and you always should. I can't tell you to not do complete, total, full due diligence. I'm not saying that at all. I'm telling you that if you go through these 7 steps, you're going to understand companies a lot better. You got better results from trading them. Just remember, if you really want to know what to look at for any company, just drop over to peterleeds.com and look at the 29 points of Leeds analysis. Thank you guys so much. You guys are awesome. I love helping you out. I hope I'm helping you out. And we'll have another video for you in a couple of days if you subscribe.